All right, so today we're going deep on something that's been requested a bunch of Nepal's capital and money markets. We're going to dig into the real issues at play here, not just skim the surface,
Yeah.
you know.
Right. And it's going to be fascinating, I think, to really look at the heart of the problems that are kind of shaking things up.
So based on some pretty in-depth analysis we've got, we'll try to break down what's happening right now and what the future might hold.
Yeah, the interplay between the capital market and the money market, that's where things get really interesting.
Yeah, it's the core of it. We got to understand both. One's long-term, one's short-term, but they're so connected.
Exactly. And this analysis makes that connection crystal clear, especially when you see the problems both are facing.
Let's start with capital markets. One of the big issues that jumps out from the analysis is liquidity, or I guess the lack of it. It's way less fluid than what you'd see internationally.
Right. And when you've got less liquidity, well, everybody involved faces higher risk.
And volatility. Things can swing wildly.
Totally. And, that lack of easy buying and selling, that comes from a few things. Like, take the 10-share minimum rule on any PSE, the Nepal Stock Exchange. If you're a smaller
You
investor.
have to drop a serious chunk of change just to buy 10 shares.
Yeah, exactly.
But
Especially for a company, like Unilever Nepal, that can be a real barrier to entry.
it's more than just inconvenient. It really messes with how prices adjust naturally.
Absolutely. You also have the limit order system, where you can only make bids or offers 2% above or below the last traded price.
That's crazy. You'd basically have to be glued to your screen all day, like a day trader, just to get a decent price.
Yeah, and don't forget the 10% daily circuit breaker.
Oh, right, right. It sounds good on paper, like it's there to protect everyone.
Like a safety net, right?
Yeah, but the analysis points out, with these thinly traded stocks, it can be manipulated.
Oh, easily. And then you've got these matching orders where people can bypass the whole anonymous trading system. That's a big problem.
Yeah, because it really distorts share prices for the average investor.
100%. And it just adds to the feeling that things aren't quite right. Then pile on those clunky processes for freezing and unfreezing shares, data synchronization issues.
Oh, and the whole separate system for founder shares, which, come on, that's got to go.
All of that just creates more friction in the system.
It really does. It discourages people from actively trading,
Yeah.
and that hurts the market overall. And then, beyond just this lack of liquidity, there's the issue of instability. I mean, we saw that massive dip in the NEPSE index back in October 2021. What was the trigger for that?
Well, it seems like a bunch of different things kind of came together at the wrong time. You had credit limits imposed by Nepal Rastra Bank, the central bank. That probably froze up a lot of potential investment capital.
Oh, yeah, hundreds of billions of NPR, potentially.
Then a lack of consistent leadership at both the stock exchange and SEBA, the securities board, that's just led to all sorts of uncertainty around policy.
So nobody knew what the rules were or where things were headed?
Right. And then on top of all that, you have the banking sector itself under pressure, more banks competing, a slump in real estate.
And the stock market decline itself feeding into the cycle.
It was like a perfect storm of instability.
So you've got these big systemic issues, and then you layer on the fact that many investors seem to be making decisions based on rumors.
Ah, yes. That's a problem. The lack of real financial literacy and the skills to actually analyze a company's performance.
It breeds impatience and leads to rash decisions for sure.
Right. The analysis really hits the nail on the head. We need robust financial education programs. SEBA should really take the lead on that. And this should reach everyone, not just the urban areas, down to the local level.
Absolutely. We need to empower people with the knowledge and the tools to make smart, informed choices.
Right. And that includes access to reliable digital tools and systems that can help people participate more confidently.
Okay, so beyond these issues, another big thing holding back the capital market is the lack of investment options.
Oh, totally. It's mostly just stocks.
Right. What about bonds?
Well, the bond market is seriously underdeveloped. The government issues bonds, sure, and they're listed on any PSE, but there's basically no trading happening in the secondary market.
So it's like they exist, but they're not really a viable investment.
Pretty much. And there aren't many privately issued bonds either. This lack of diverse instruments really limits those long-term investment opportunities.
And that makes the whole financial system less resilient, doesn't it?
Exactly. And even things like collective investment funds, they just haven't really gained much traction.
So it's this limited toolbox. All right, let's shift gears a bit and talk about the money market. It sounds like interest rates are a roller coaster ride over there.
Yeah, that's a major problem.
Can't be good for business.
No, not at all. This analysis points to a whole bunch of factors at play. You've got inherent market risks, existing regulations, the constant ebb and flow of liquidity.
Government spending cycles, election periods.
All of that contributes to a really unpredictable environment for businesses.
They don't know what to expect, so it makes it hard to plan and invest.
Exactly. And just like in the capital market, liquidity management is a huge challenge in the money market. Banks and financial institutions are constantly struggling to keep enough cash flowing.
Which, of course, leads right back to those unpredictable interest rate shifts.
Yeah, it's a vicious cycle. And, Nepal being so reliant on imports puts constant pressure on its liquid assets.
Right, they're always spending to bring goods in.
Exactly. And then you've got fluctuations in foreign exchange reserves and, the government doesn't always manage to spend its allocated budget effectively.
Which further tightens things up.
Right. And then the central bank has to step in sometimes to absorb excess cash when it pops up.
So they're constantly putting out fires.
It's a juggling act for sure.
So what about the financial institutions themselves? What role do they play in all of this money market drama?
Well, they're really the crucial link between, the people who have money to save and those who need to borrow. But if banks make poorly planned investments, that puts a strain on their own liquidity.
Makes sense. If they're overextended, they can't lend as freely.
Exactly. And then there are the problems within the banking sector itself. Like if you have a rise in bad loans.
That erodes confidence.
Yeah, and suddenly lending tightens up across the board. It becomes a self-fulfilling prophecy. And you have to remember, banks are really dominant in Nepal's financial landscape.
So the central bank's policies have a huge impact.
Massive.
Which brings us to the regulators. Nepal Rashtra Bank and CBAN. They've got a lot on their plate trying to keep everything stable.
That's an understatement.
Right.
Nepal Rashtra Bank, they're focused on the big picture overall financial stability through monetary policy. So that means grappling with liquidity, interest rate management, making sure credit is available.
Sounds like a tall order.
It is. And the thing is, the number of banks has exploded, but the focus on quality hasn't necessarily kept pace.
So you have more players, but maybe not all of them are playing by the rules, or maybe just not as skilled.
Right, and that adds to the pressure. Then you throw in rising bad loans, all those external economic pressures. It's a lot to manage. They are trying, though. They're actively working to strengthen oversight.
They're doing their best to steer the ship. And meanwhile, CBAN is over there trying to cultivate a healthy and vibrant securities market.
Yeah. So their job includes things like registering new securities, supervising all the trading activity, regulating market professionals, and protecting investors.
Sounds like a full-time job.
More than. They're actually facing staff and skill shortages, a growing workload, and this really urgent need to upgrade their technology. They are making progress, though. They're trying to break up the existing monopoly by licensing new exchanges and streamlining the whole IPO process, when companies first go public.
So trying to get things moving a bit faster, it really feels like better teamwork between these two agencies is vital, especially given how big of a role banks play in both markets.
You're hitting the nail on the head there. They need to be working together, especially on things like introducing new financial products, policy reforms, and getting those financial literacy campaigns off the ground. The problem is they have different mandates and priorities.
Right. So they might not always agree on the best course of action.
Exactly. Communication is key.
Okay, so we've talked about all these market issues, but the big question is, how does all of this impact Nepal's economic growth? It seems like a healthy capital market is essential to channeling investment and fueling expansion.
I mean, that's the whole point, right?
Yeah.
Stronger economic growth means companies earn more, which attracts investors and lifts those stock market values. But it works the other way, too. If you've got high inflation, high interest rates, that puts the brakes on the capital market. And then Nepal's overall economic health has a direct impact on the money market, too.
Things like foreign capital flows,
Yeah.
remittances, that all plays into liquidity and interest rates.
Yeah, absolutely. State of imports and exports, how much money is coming in from Nepalese working abroad, it's all connected. Even things like the government spending and how it collects revenue, that affects the liquidity levels. And the money market, that's what keeps everything running smoothly. It's how banks set their interest rates, how Nepal Rashtra Bank implements its monetary policy.
Okay, so with all these challenges laid out, what's being done to fix things? And what might the future hold?
Well, there have been some efforts, both from the government and the private sector. You've got the Securities Act, the push to establish new stock exchanges, Saban trying to tighten up those IPO rules and increase transparency.
Nepal Rastra Bank tweaking its monetary policy to get a handle on liquidity and interest rates.
And those financial literacy programs we talked about. But looking ahead, there are a lot of potential moves that could really shake things up. I mean, imagine if they got rid of that minimum share rule or introduced intraday trading.
That would inject some much-needed energy into the market.
For sure. And we need to keep pushing for more investor education, more development of the bond market, modernizing the stock exchange.
And of course, those regulators need to create stable, prudent policies that encourage growth, but also protect investors.
Totally.
So taking a step back and looking at the bigger picture, when you compare Nepal to other developing countries, how do its capital and money markets stack up?
Well, the analysis suggests that Nepal's capital market is definitely less liquid compared to a lot of its peers. You see that reflected in various metrics, the ratio of market capitalization to GDP, the annual turnover compared to market capitalization.
And the bond market is notably smaller too, right?
Oh yeah, significantly smaller relative to the size of the economy. And in a lot of developed countries, the central bank plays a much bigger role in developing the capital market.
Interesting. Are there any specific examples that stand out?
Well, look at India, for example. They've created competition between stock exchanges like the NSE challenging the BSE. That's had a really positive impact.
So healthy competition can actually be a good thing.
Absolutely. And I think there are some key lessons that Nepal can take away from these successful examples. Things like policies that encourage more competition, prioritizing technology to modernize trading and clearing systems.
Building out the infrastructure and policies for a robust bond market.
And of course, those investor awareness programs are crucial.
Right, right. Okay, final piece of the puzzle. The actual nuts and bolts, the infrastructure and technology needed to support all of this, it sounds like there's room for improvement, to say the least.
Yeah, well, both Saban and NetBSE are facing those staff and skill shortages we mentioned earlier. And secondary market trading, it's not fully automated yet.
Still a lot of manual processes, which slows things down.
Yeah, exactly. So modernizing that central depository system is essential. And they need to adopt more advanced online trading platforms, the kind of technology that investors are used to using in other markets.
Right, if they want to attract more international participation, they have to up their game.
Exactly. And I think exploring things like blockchain technology, that could be really game-changing for trade management.
It's interesting, though, because Nepal has made some strides with digital financial services.
Oh, absolutely. The use of mobile banking, QR-based payments, internet banking, all of that has been growing rapidly.
So there's a foundation there to build on.
Absolutely. And Nepal Rastra Bank is even considering issuing a central bank digital currency, a CBDC. So that's a sign that they're looking ahead and thinking about the future.
Okay, so to sum it all up, Nepal's capital and money markets are facing some serious headwinds. Illiquidity, instability, low investor awareness, a limited range of investment options.
Volatile interest rates, challenges with liquidity management.
It's a long list, but some progress is being made. The future hinges on increasing liquidity, stabilizing the market, empowering investors with knowledge and tools, developing new financial instruments.
Ensuring interest rate stability, modernizing infrastructure and technology, fostering cooperation between those regulators.
And learning from the successes and challenges of other developing economies. It's a big task.
It is.
But considering how deeply connected these markets are to Nepal's overall economy, it's a challenge worth tackling.
Right, and that leaves us with a question for all of you listening. What single action do you believe would have the most positive impact on Nepal's financial future? Think about it.
It's something to consider. Thanks for joining us on The Deep Dive.
See you next time.